Welcome to Grab the Horns. Today the stock that we're going to be looking at is Baidu Inc. Ticker symbol is BIDU. Now Baidu is basically the Google of China. In fact, there was a lot of talk when Baidu first came out that they were stealing Google's entire business model and basically putting it online for their own. What we're going to do though is we're going to take a look at Baidu, look at some technicals and some fundamentals of the company, and just kind of dive into the stock itself. So let's go ahead and get started. Alright, so like we mentioned, Baidu is really like the Google of China. It's the largest search engine in China by a long shot. It's got close to 80% of the market share. And its balance sheet is just as healthy with plenty of cash, very little debt, and a reasonable 4 PE, given its best-of-breed status and growth potential. So this is basically what Baidu looks like. As you can see, it's very similar to the look and feel of Google. So this is where some of that talk came up before. And looking at, did Baidu steal basically what Google had? Okay, here's a chart of Baidu. This is a 52-week chart, so a year-long chart. What we can see here is its low is $65.90 back here in June, July of 2010. It came up here, hit its high in mid-April, early March, $156.04 there, as you can see. Now, since then, it's fallen off substantially from there. It's actually fallen below its 50-day moving average, which is this blue line here, and it's closed around $120 a share. Now, it's also fast approaching its 200-day moving average, which is this red line here. That's a little bit concerning. Anytime a stock goes under that 200-day moving average, not something you really want to look at. Now, it hasn't fallen below that since early 2009. However, with the recent downturn in China-based stocks, as well as the overall market, it makes it a good possibility that it could very likely fall below that 200-day SMA moving average, filling in a gap at around $110 a share. So that's something definitely to watch for there. Now, long-term, Baidu is a best-of-breed stock with a healthy balance sheet, which is a very good thing when you look at a company like that. Now, there is a lot of worry on Wall Street right now about a tech bubble 2.0. This is something that is very, very worrisome and troublesome, especially when we look at LinkedIn, the recent company that IPO'd here, being one of those stocks at the center of that argument, given its rich valuations for the company and really what's behind it. Baidu may continue on its slide here, taking into consideration the overall U.S. economy as well as China-based stocks and how they're struggling right now. Also looking at, the tech bubble that may be here for the second time. Hopefully not, but we could see something like that. So we may see Baidu fall a bit more. It may even drop below that 200-day moving average and return to its lows of 2009 when it did that. However, Baidu can recover from that. It's got a strong balance sheet. It's got good valuations. So long run, this stock can easily recover, make some new highs, and really start to see somewhat of an upward path. So hope this helps. Hope that Baidu is something that you're able to now look at with a little bit more confidence when you look at the stock and kind of understand what it's doing. As always, use this information, get out there, grab the horns.